Hello, this is Nataraja. Welcome back to Top 50 Mutual Funds Analysis, which is done on a weekly basis. So this is the one for the week ending on August 23rd, which is last Friday. I was busy during this weekend, so this is coming a bit late, at least a day late. Let us look at the overall summary. The mutual funds had a good week last week. You can see that the weekly averages are all positive. If you look at the top 50 equity funds, 2.59% for the week, 8.26% for the month, and 48.59% for the year. Looking at the top 50 annual leaders, 2% for the week, 3.48% for the month, 72.99% for the year. Then if you look at the hybrid funds, they're all positive. The annual top 50 is at 35.82 compared to 72.99 of equity top 50. Then debt funds, as usual, the same similar numbers. Even commodity funds were positive for the week and turned positive for the month. Though 3 months average is still negative, but the annual average is 18.61. Out of this, last 6 months was 16.78%. So looking at the equity overall average of all 882 funds, 1.71 for the week, 2.97% for the month, and 42.16% for the year, which means that randomly, if you have selected some funds, your chance of hitting 42.16% for the annual gain was real for the last 1 year. Look, going forward, will this be the same? We need to see. So that is all looking good for last week. We are getting into top 50 equity funds, and there are many in the green. What are in the green are those which have above average return within the top 50 from 1 month through 1 year. HDFC Pharma and Healthcare Fund, White Oak Capital Pharma and Healthcare Fund, UTI Healthcare Fund, Quant Healthcare Fund, ICICI Prudential Pharma Healthcare and Diagnostics Fund, Bandhan Small Cap Fund, UTI Innovation Fund, Mirae Asset Healthcare Fund, Tata Nifty Mid Small Healthcare Index Fund, and Motilal Oswal Small Cap Fund. These are all in green, and it is safe to invest on them as a fresh investment. In fact, you can see that Bandhan Small Cap Fund is appearing here for the third time, which proves the value of this analysis. When someone is doing well, it is worth following such funds for a superior return. And then there are some in orange or the amber color. These are the funds which have reasonably done well, except they missed the above average return in one timeline. So they are DSP Healthcare Fund, Tata India Pharma and Healthcare Fund, ITF Pharma and Healthcare Fund, LICMA Healthcare Fund, Motilal Oswal BSC Healthcare ETF, Motilal Oswal Large and Mid Cap Fund, Motilal Oswal Focused Fund, Motilal Oswal Multi Cap Fund, Motilal Oswal ELS Tax Saver Fund, Bank of India Small Cap Fund, DSP Nifty Small Cap 250 Quality 50 Index Fund, Bandhan Innovation Fund, Union Innovation and Opportunities Fund, Motilal Oswal Nifty Micro Cap 250 Index Fund. Now the annual returns, if you look at, the highest is Bandhan Small Cap Fund is at around 76.42%, and it's also doing well recently. So that is my top pick. I may invest again this week. Last 2 weeks I did invest. I may consider investing in them again. So that is so basically you can see that healthcare funds are leading here. Two small cap funds made it to the green list, and some tech funds are also in the top 15 list. There's a good chance that tech funds may look better because of the lower interest rate rumors in US market may make the tech investments better, in which case the Indian tech companies will get better revenue and profits. So I won't be surprised if more tech funds will come into green in the next week's report. That is just a speculation, by the way. Now, let us look at the bottom 50 funds. These bottom 50 funds is to recognize the potential bearish reversal of the some of the equity funds. This is done by identifying above average return in bold, black bold here, and below average monthly return and weekly return in red. So those funds which have above average annual return and below average weekly or monthly return are highlighted here. These are Nippon India ETF Nifty PSU Bank BEES, Kotak Nifty PSU Bank ETF, DSP Nifty PSU Bank ETF, ICICI Prudential Nifty PSU Bank ETF, Miro Asset, S&P 500 Top 50 ETF FOF, Miro Asset Nice Fang Plus ETF, Motilal Oswal Nasdaq 100 FOF, Miro Asset Nice Fang Plus ETF. So in summary, these Nifty PSU banks and these US market based mutual funds are showing the signs of reversal. So if you are invested, you may have to consider divesting potentially, or at least not investing further. So there's a message here. Now we are going to the annual top 50 equity funds. CPSE ETF is in the top and also made it to the green status. The other ones are LIC MF Infrastructure Fund, Bandhan Small Cap Fund. Only 3 of them made it to the green status. And the amber status is Bandhan Infrastructure Fund, Quant Manufacturing Fund, Kotak Nifty Alpha 50 ETF, Franklin India Opportunities Fund, Motilal Oswal Mid Cap Fund, UNESCO India Focus Fund. Now, the darling, which used to be until last month, HDFC Defense Fund, has now fallen into 98.73 on annual return. Though it had a good weekly return, monthly return is still negative. And see, sometimes these kind of funds can show a lower annual return, even with positive monthly return. It is simply because these are the rolling returns for the date chosen. So if there are very good return for the week that is falling off compared to the most recent week, the returns can be shown lesser. Bottom line, HDFC Defense Fund has lost its luster. CPSE ETF is still shining great with 112.76% return. And overall, there are choices. These 3 in green are easy choices. CPSE ETF, LIC MF Infrastructure Fund, Bandhan Small Cap Fund are easy decisions for further investments. Now let us look at the annual bottom 50. This is not really very useful, but it gives you some indication of the bullish reversal. Now, bullish reversal is considered by above average return either for the week or for the month. I have disconnected the annual return percentage, whether it is above average or below average. I have kept it outside because it is not going to make much difference. Because if you look at it, annual average lowest is minus 11.34. That is, you lost the money here, and highest is 19.68. So keeping this out, only looking at weekly and monthly above average returns for these laggards, you would see that there are some signs of recovery. I will not discuss anything specific here. LICMF Banking plus Financial Services Fund, World Mining Fund, DSP World Mining Fund, HSBC Brazil Fund. This has been lagging for a while, and now it is showing some recovery. No way these are investment recommendations. It's just to sense how the market is turning around for some of the funds. But there is a bad news here. There are a bunch of Nifty bank ETFs. They are stuck in the bottom 50 for a long time, and they're not even showing the signs of recovery. That is the really bad news. Now, hybrid, it's a usual story. Typically, the leaders are similar, but there is a change with respect to which made a green status within the monthly top 50. Axis Retirement Savings Fund Dynamic Plan, Bank of India Mid and Small Cap Equity and Debt Fund, JM Aggressive Hybrid Fund, Union Children's Fund, Axis Retirement Savings Fund, Tata Retirement Savings Fund. These are green. See, the two common names are JM Aggressive Hybrid Fund, which has returned 53.61%, Bank of India Mid and Small Cap Equity and Debt Fund, 48.61%, because these things keep on appearing more common in the monthly top. Annual top, similar name, JM Aggressive Hybrid Fund, Bank of India Mid and Small Cap Equity and Debt Fund, Axis Retirement Savings Fund, Dynamic Plan, UNESCO India Aggressive Hybrid Fund, Axis Retirement Savings Plan, Fund Aggressive Plan, Mahindra Manulife Aggressive Hybrid Fund, Edelweiss Aggressive Hybrid Fund, Union Retirement Fund Direct Plan. These all made green. The one which still has highest annual return, Quant Dynamic Asset Allocation Fund, so it has 59.86% for the year. It has been a laggard in terms of 1 month, 3 months, and 6 months. Similarly, Quant Multi-Asset Fund is also a laggard. So if you notice the reports nowadays, almost the mention of Quant funds as a top leader is very rare. In fact, 6 months back or 1 year back, you would have seen Quant funds making the top of the list many a times at many positions. So Quant has lost its luster. So be careful with the Quant funds, especially have made significant investments. Nowadays, they are no more darlings. So that is about the hybrid. Now, lastly, we are coming to commodities. Commodities have been going through a yo-yo journey, up and down and up and down. This week they were up 2.04%, but monthly they were hugely negative. So now they have popped above zero, which is good. Only one fund is more stable, which is Zerodha Gold ETF, making it the green status simply because it does not have data for 6 months and 1 year. So it doesn't have baggage. So it is easy for it to be proven worthy. So if you have to invest, consider Zerodha Gold ETF among this volatile period for commodities. Many of them are in orange. Annual returns, you can see some are in 21% range. Average is 18.61%. So that is about commodities. So that comes to the end of key discussions. Usual disclaimers apply. This is for you to understand how the mutual funds market varies on a weekly basis with considering top 50. Even there are suggestions of investments, but it is not a solicitation and it is your decision. So be careful with respect to the risk associated with these investments. And with that disclaimer, I would like to highlight that the blog is already there on this Nats Fund Corner on Blogger, and all my mutual fund reports, whether it is a special one or a weekly one, you can see in one of my many social network platforms. And I have downloaded data for a special report of debt funds. And through this week, I will create that report and you can look forward to that. So with that, I am coming to the end of this bulletin. See you again soon.